Let's get more on the direction now for the greenback. Joining us is Bloomberg Intelligence's Chief Asia FX and Rate Strategist, Chiu, this morning. Steve, the decisive Fed pivot really coming through. Is this something that really undercuts the dollar's near-term potential, at least, or prospects?
For sure. I mean, what's interesting is you can tell that the Fed is trying to push back market rate expectation basically throughout the year until yesterday. So even though if they do that again, I mean, market would just ignore it and price in further cuts anyway. But now, so finally, Powell is giving what the market wants, as you see. So the dollar basically collapsed, and that move will probably last until early next year. But the point is that now market has priced in 150 bits of cut, and starting from the first quarter of next year, is the Fed going to deliver that? If not, then obviously there's going to be some stabilization or rebound in the dollar, because it's going to be very hard to basically outperform what market has priced right now.
Okay.
Yeah.
What currencies benefit the most from, at least from up until the first quarter next year, as you're saying? From
the low yielders. So basically the underperformers last year, Korean won, Taiwan dollar, Thai baht, actually. So these three are going to be the stars, really. What
about the Japanese yen as well? Because I think if you think about 2023 in FX, it really was the year of the carry trade.
Yes.
What about 2024? Is that sort of shut as well?
That as well, but I think there's one complication. It's what the BOJ does, right? So everybody is watching the BOJ next week, basically. Are they going to normalize? Are they going to end negative interest rate? Are they going to end yield curve control? Because to some extent, it also depends on that. If the BOJ disappoints, then probably the yen rally will be slower than expected. So I think BOJ matters more, actually, on that regard.
And renminbi, I mean, you have the macro weakness going on domestically, but then you have a favorable backdrop externally. How does that mean? What does that mean for renminbi now?
To be honest, that's actually have been our view. We didn't really like the renminbi this year, and also next year, actually, same view. So a weaker dollar helps the renminbi. So dollar China could end lower or even below 7, but that's because on the dollar, 90% the dollar. Because China's fundamental is still somewhat weak or feeble, and we don't see a quick turnaround, especially in the property sector. So that's why lower dollar China will be because of the dollar. And the renminbi is very likely to underperform the rest of the EM Asian peers.
What do you think about in terms of just what the PBOC is going to set, right? We've seen that gap between the spot rate and the fixings for much of last year, or this year, I should say. But is that likely to narrow, just given that the Fed might be ending this tightening cycle now?
Yeah, but I mean, the message from the fixing is that PBOC has no rush to pull down dollar China.
Yeah.
Because basically what happened since at least September is you can see that gap. The gap between the fixing and the onshore and the offshore spot is narrower. The gap between the fixing and the model forecast of the markets is narrower. So basically, it's heading towards the right direction to close all the gaps. It's just they have no rush to do that right now.
Moving further afield, because I've got the ECB decision as well ahead, how do you think that's going to play into the direction of the dollar-euro cross rate, especially because Europe could be heading into a recession?
Actually, so Euro and also Eurozone, for example, compared to the US, they're very similar. So they're seeing inflation slowing this year, actually much faster in the Eurozone. And the economy per se is actually weaker compared to the US. So actually, when we talk about a turnaround to rate cuts, probably the ECB will have to do that first, earlier than the Fed. So that's why even though the Fed is turning dovish, then probably the ECB will have to do the same. So meaning that for Euro-dollar, it's not going to rally too much.
Yep, they've given them a little bit more leeway, it seems, today. Chiu, thank you. Our Bloomberg Intelligence Chief Asia FX and Rate Strategist.